So you're going through the mortgage process, but also about to change employers? What do you do? Watch this before you move forward. Stay right there. When I get back, we'll talk all about it.
You were talking about money, right?
Separate yourself widely from the pack moving forward. Is that something that you would be willing to have a discussion about?
Because they didn't get it.
They
were
probably
like,
didn't get it. Yeah.
To follow up with your clients to generate more leads.
Hey guys, it's Mark Jones, your Millennial Mortgage expert, and this is Millennial Market Talk. And I wanted to talk today about switching employers in the middle of going through the mortgage process. This is something that I get asked quite often, to which each time every scenario is different. It is a case-by-case basis, and there's a couple of things that you guys need to know. So let's talk about it. The first thing that I want you guys to know is if you are intending on switching employers amidst the mortgage process, let your lender know. That is the very first thing, so that they can then go and advise you on whether you should, shouldn't, or wait, or what documentation you may need in order to continue down the process of purchasing a home. Let's talk about different situations in which you would need to change employers. The first, if you lose your job, termination, that is definitely a reason why you would have to quickly turn around to find new employment. A promotion, another would be moving locations or areas that you can't work remotely. You may also be recruited by another company for whatever it is that you do. You could be working for yourself as a self-employed income earner, or potentially be switching to self-employed income to better your future and how much you can actually earn. These are all valid reasons that someone would switch employer or switch jobs. And each one of them has a different nuance as to what the mortgage lender would require in continuing the process of purchasing a home. So now let's talk about the different documentation that is going to be required when something like this happens. The first thing that we're going to need, guys, is going to be the offer letter to confirm that this is what you're doing. It sets the expectations on how much income we can use. And based on that offer letter, that will pretty much determine how we're going to move forward with the actual loan itself. We absolutely will need a most recent pay stub. In only a few cases can you close on a loan prior to starting your new position. And in these cases, they are considered irrevocable contracts. There are some cases where doctors, teachers, and professions like that can sign or be offered an irrevocable contract for employment. In those cases, conventional loans do allow you to move forward with the simple contract because they know that there are repercussions that come in play if you don't show up. In those cases, we can also contact the employer to verify your start date for verification. We will, in the end, also need a written verification from the new employer. This is something that we typically will send out to the new employer to have them complete based on your status with the employer, how much you're foreseen to make, the type of income that you're going to receive, and the way it's structured, in addition to the likelihood of your employment continuing. So here's a couple of different scenarios in which it would have a negative impact on you. And I'm just going to run through these. Let's say you're moving from a salaried position and you have a base type pay, and now you're switching to a heavily commission or bonus pay. That, guys, is going to be an issue. If you are becoming a contractor or self-employed borrower and you previously were receiving W-2 type income to where they're taking the taxes out right now, that could be a negatively impacted decision. If you're currently moving from one industry to another, completely different industry, even though the pay or pay amount will be similar in some cases, it deems the previous 2-year history null and void. Now, if you are considering relocating, it's important that we as the lender verify that if you're staying with your current employer, we want to know that you have the ability to work remotely, or there's a spot for you to come here in the new place. We'll need a new relocation letter or verification of employment that it is okay, especially if your current employer is in, let's say, California, but your new home is going to be in Texas. Now, again, every scenario is different, so please go over your scenario with your lender and tell them as soon as possible. And lastly, if you are frequently changing jobs, it can also be seen as unstable income. What we are looking for, guys, is continuance of employment. We go back 2 years to ensure that you have been employed for at least 2 years. And then we want to know if you are going to remain employed with the same income, and it needs to be consistent. That is the key to this, is consistency. If you work somewhere and you are full-time, but you are working some days 5 hours, some days 10 hours, and in the total week it's 32 hours, and then the next week is only 24, well, then your lender is going to have to average that income because it's not a consistent basis. I think that's super important that you guys understand when you are applying for a loan, that just because you make, let's say, $20 an hour and have the ability to work 40 hours, it doesn't mean you can get credit. We typically would go on an average, especially in that scenario. Let's talk about the self-employed borrower. If you are currently self-employed and switching to an actual W-2 type employer, it's important for us to be able to tie what you're currently going into doing as W-2 employee to what you've been doing to make a 2-year history. Now, after we've received a verification of employment and you're actually working there for at least 30 days, we can then show that you are now foreseen to continue working at this type job. If you are considering going the other direction and currently working W-2 type income where you get paid hourly, salary, commission, any of those, and thinking about going self-employed, guys, it's very important that you consider holding off on that. And the reason being is because you would have to wait typically 2 years and in some cases 1 full year of filing your tax returns. And I'll go further on that on a separate video when I talk about self-employed borrowers and what they need to look for in getting prepared to purchase a home. The next would be if you are switching, making a, let's say, lateral move. You're currently a salary employee and you're switching over to another employer doing the same type of work. That is absolutely acceptable. And as a lender, we typically just need to verify the employment with the new employer. Some cases you may have to wait until you receive your first 30 days worth of pay stubs to ensure that. The next would be taking an opportunity to earn more money, but you're changing the way that your income is received in the sense that you would be paid salary or hourly and now switching to commission. If that is the case, we as lenders don't know what the consistency of your commission is going to be, nor can we foresee the future. So in those cases, we would, similar to a self-employed borrower, have to wait at least a year to determine what type of income and how often and consistent is this going to be. No, you don't pay taxes like a self-employed borrower when it comes to commission, but we do know as a fellow commission employee that it is inconsistent. So you have to take an average. And if you are currently working as a commission employee and considering switching over to the same line of work, just a different employer, we would at least want 6 months to determine if the switch is going to be consistent or greater than what you were receiving before at the current employer. Even though they're the same industry, we don't know how this is going to affect you, especially if you are someone that is moving from out of state to here. It's a new location, you don't have the same book of business, or we would have to simply prove that your business will likely continue the same way that it was. So you take those things into consideration when you're going down the road of purchasing a home. Now, if you're someone that is a truck driver or a type of position that it does require you to switch employers quite often, and we can actually see a trend in this, that's something that we absolutely can take a look at to see if this makes sense as you move forward and it is a customary for that type of position. I see welders in that similar scenario. They go where the work is, but at the end of the year, they have a consistent income coming in, and you can look back for 2 years to see that trend. So guys, there are plenty of other factors that go into this, but I did want to just go over a situation that you or a friend may be in that could give you a little bit of advice. But the best advice I can give you is to talk to your lender. Make sure that they are fully aware, because I can tell you these things will be discovered if they are not talked about. We as the mortgage lender do plenty of verifications, and we do them throughout the process of the loan, especially the day of funding. I've had a loan before to where they switched employers, didn't let us know, and the day of closing, we called to do a verification and they no longer work there. Unfortunately, guys, they weren't able to close on that loan. and it puts everybody in a pretty tough situation. So if you are getting ready to go through a job change or considering a job change, maybe for promotion or other reasons, please talk to your lender. And if you're looking for a lender that is willing to be transparent and educate you on the different programs and walk you through the process, visit us at LaCanteraloans.com to get your financing options from an expert. We are here willing to help you accomplish the American dream of home ownership. So that being said, guys, if you're getting something out of these videos, please like, subscribe, share with a friend. But this is Mark Jones, your Millennial Mortgage expert, and you guys make today count.
You were talking about money, right?
Separate yourself widely from the pack moving forward. Is that something that you would be willing to have a discussion about?
Because they didn't get it.
They
were
probably
like,
didn't
right.
get it. Yeah.
To follow up with your clients to generate